Welcome to The Rundown with Ramon. My name is Ramon Ray, host of The Rundown with Ramon. In today's episode of The Rundown with Ramon, I interview Joe Cecala, who's the co-founder of the Dream Exchange. The Dream Exchange setting out to be the first minority-owned stock exchange in the USA. In fact, if you didn't know it, it's not easy to set up a stock exchange. There's only about 10 or less of them in the USA. We know of stock exchanges like NYSE, New York Stock Exchange, or NASDAQ, and these stock exchanges cater to billion dollar huge companies. The purpose of the Dream Exchange is to help mid-market companies, those 5 million to 85, 100 million or so, what about their capital needs to scale, to hire more employees and get to the next level. Check out my interview with the co-founder of the Dream Exchange to find out what you probably didn't know about stock exchanges and how you can grow your business and get to the next level. Check this out. Hey everybody, welcome back to the Rundown with Ramon. My name is Ramon Ray. Joseph Cecala, good to have you here from the Dream Exchange. Glad you're here with me today on the Rundown with Ramon. First, before we dive into the Dream Exchange, just say hi to the people. Tell us a bit about yourself. We're going to keep some mystery. What's your background? What brought you here today? And then I will ask you that again, or you can go right into it. What is the Dream Exchange all about?
Sure.
Welcome.
Well, and thank you very much for having us. This is a journey to get the word out on what the Dream Exchange is. So, I'm Joe Cecala. I'm the founder and CEO of the Dream Exchange. I've been at this now for in my 18th year of
Congratulations.
create a new stock exchange in America has been a long journey. But the Dream Exchange will be the eighth stock exchange in the United States. We're in the process of our application. It's called a Form 1 application to get our national stock exchange license. Once granted, we'll be a direct competitor of the New York Stock Exchange and the NASDAQ and the Members Exchange and long-term and investors. There's 7 others, and we intend to be in that marketplace. But mostly what the Dream Exchange purpose, why did we do this, is to work on capital formation, which the public markets have gotten away from a little bit. There are not very many IPOs at all anymore, and especially to work on public capital formation for small companies. So we want to do a lot of IPOs for small companies that have great ideas. That's really the main purpose that we created the Dream Exchange all these years ago.
That's like a T-shirt, man, or a wristband, or something like that, to create IPOs for small companies with dreams. You said, is that what it was? What was that?
Yes, exactly. With great ideas.
I
I
love.
mean, it really is about the dreamers. I mean, not to steal the thunder of what we're doing, but
Sure.
our country has become great because of our ingenuity. We outcreate other nations, and what we want to make sure that we do is the dreamers, the people that are the innovators, the future, the people who think through and solve problems. We need to make sure we get them capital. We need to make sure that, especially in the public markets, that people are able to have the opportunity to get capital, and the investor side are able to make investments in small companies that become big companies and build, wealth and have generational wealth creation. So it really is about the dreamers. It's about the dream, and our dream is to make the other dreamers' dreams come true.
I love
So
that. No, I love that. Powerful. And help me
a lot of
understand
dreamers.
it for those listening to us today, Joseph, talking about the different forms of capital that one can get. When you said to make bigger companies, I'm guessing it answers my question already, that maybe this is why building your business, again, this is a layman question, a layperson question, on your credit card, with crowdfunding, with some money from a bank loan and things. Is it because, and again, I should wait for your answer, but it's because these vehicles are really great for smaller companies. But when you want to be the next billion-dollar brand, there's not too many places. Is that fair, or is there a different answer? But my question to you is, why do we need a stock exchange at all? And then why the Dream Exchange?
Great. Yeah, I mean, you're kind of leading into the answer, which is, so first of all, there's a gradient of raising capital. You're right. When a company starts out, usually it's on the entrepreneur's dime.
Mhm.
I've met many people who've put their payroll on their credit cards. Um, and then you work through to friends and family and to angel investors and seed investors and crowdfunding, and you can raise a good amount of money. You can raise $5 million with crowdfunding. And then, there's the world of venture capital and private equity, and they invest many millions of dollars. But there's some attendant problems, which is the why the Dream Exchange. So the first problem that I think a stock exchange addresses is it's a larger amount of money. For more stable companies. So above 5 million. In fact, what we've kind of invented is a market niche between 5 and about 75 to $100 million. So those are really good companies. Those are companies that could use sizable amounts of money to expand. Where are you really going to get that? Well, there are very few places to go and land and get that capital. You have to usually have a bigger venture capital firm or a private equity firm, or you might have to sell the whole company to a competitor. So what the public markets, and we've gotten away from this over the last 50 years. Really, it's concentrated in the last 25 years, where a company could do an IPO. They could form capital with the general investing public of the nation. And we really want to bring that back. So it does all the favorable things that those healthy capital markets did. One is forming capital for the companies. And two is, you never hear this expression anymore. Would you like to get in early on an IPO? Because if you can invest in the company in its earlier stages, well, naturally, as the value of the company goes up, you're building wealth. So that's really a high level, perhaps 40,000-foot overview of the why. And most importantly, and I think, what I was saying earlier is we want to keep feeding the engine of innovation. We want to keep feeding it with a large amount of capital. And there's a number of reasons that this really works. Among them is it's more money. It's a higher amount of money than you get in the crowdfunding stage. But more importantly, these private companies, if even for the venture capitalists, once they make an investment and it's a private company, it's very difficult to resell the shares. In fact, in most instances, it's nearly impossible. And what that is called is the secondary market, right? They've bought a first set of shares and now they own them and they want to sell them. The entrepreneur, the early employees, or the early investors, they see the value of the company having gone way up, but now how do they get their money back? Well, it used to be a common vehicle. You went public, and now you own shares that could be bought or sold in a public market. And that second sale in the public market is what they call secondary liquidity. So if we can help create liquidity by allowing those companies to have a fair, trustworthy stock exchange environment where those shares can trade, and you can then sell them for any reason or no reason, it frees the capital market. It gives a free system of opportunity to the entrepreneur, the investor, the secondary investors. It's a fun game, and it always has been in America, a really fun game, but we've gotten away from helping those small companies go public. So our overwhelming concentration is let's produce capital formation for them. Let's get them in a stock exchange environment that's heavily regulated and trustworthy. And let's make them have secondary liquidity so that as the value of the company goes up, the owners of the company and the investors are able to win and build wealth and harvest their wealth in a public capital market. That's really, maybe it's a long answer to your question, but that's really why it works.
Yeah, no, it's a great answer. I love that answer for sure. I was looking at my own sound volumes there. No, love it, love it. It's a great answer. And I'm curious that since you're a marketplace, and again, many of us have heard of your existing competitors and stock exchanges. Since you're a marketplace, can you just also go back to the fundamentals of what your challenge, I guess, is that you'll need you need entrepreneurs, business owners, et cetera, to be in the stock exchange. That's one half. And to be an exchange, I assume you will need investors to be in there who are playing in the market and doing that. That's your responsibility, which would be, and the secondary follow-up, is that relatively easy to do once this launches? That's easy, or are you a business as well and you have to get both? Can you just educate us on the back end of that, how that works?
Yeah, that's probably hitting the nail on the head in a great way. People think of stock exchange when they hear the New York Stock Exchange, right, or the NASDAQ, and often that's confused with the stock market. The stock market may go up, the stock market may go down. Stock exchanges are the regulators and they're the facilitators of the trading. So when the market goes up or down, a stock exchange, fortunately or unfortunately, they make money either way. Okay. But here's the most important part. A stock exchange can function as a facilitator because it's trustworthy.
Mm.
You wouldn't question whether or not you're buying, Apple stock or Tesla stock if you went to your broker and said, I'd like to buy Apple or Tesla. And the reason for that is because the trading, the buying and selling of that is in the world of stock exchanges. We're a self-regulatory organization. So to become that is the other answer to your question, very difficult.
Yeah, well, that's what I was going to say. I mean, or
Yeah.
everybody would be doing it. It'd be like a dime a dozen. It's not like building a website. There's probably intense paperwork and fees and oversight, and like
Yeah.
no one wants to do it, but 9 other or 10 other people.
All right, that's exactly right. It's a Mount Everest climb, and right now we're about to plant our flag on the top of the mountain. So that's been a very long journey, and it's not an easy one. And it takes a certain amount of not just regulatory know-how, understanding the rules, and actually creating your own rule book. But it also takes, in today's environment, a lot of financial technology. So we'll be a fully functional electronic exchange when we open, which should be in a few months. But the point is that know-how is not commonplace. So, and for good reason, there's not a lot of stock exchanges. So where do you find people that know how to do this? And the other part of your question is, how do we intend to make that market occur? Where are the market participants? So on the one hand, there's the capital, there's the invested monies. Getting stock brokerages and investment banks to underwrite transactions isn't really our job. But I learned this a long time ago. I spent my career as an attorney representing a lot of traders, especially mercantile traders. And the lesson I learned was this: money always follows the yield, not the other way around. So when you have good investments, when you have good opportunities, money flows to it. You can actually create a lot of excitement, and you've seen it over and over, especially now today. Usually it's a unicorn company, and everybody wants to get involved in buying and selling that stock. That's the yield part, good companies. And what we've discovered, and this is actually one of our main concentrations right now, there are thousands of them. There are literally thousands of companies that are eligible, that are making money, that are profitable, that have great ideas, that could use a sizable amount of capital in a public market, but they're not your typical venture capital investment. So a venture capitalist looks at an investment, and before they'll be willing to invest money, they need to see a minimum an increase in value of 10 times. Sometimes they have a bar of 20 or 30 times what their initial investment is. Well, that's not really how your typical public market works. But the interesting kind of analogy is, listen, if you made an investment today of $1, and 5 years from now, it was worth $2, it's a doubling in 5 years. That's a 15% internal rate of return on that investment. That's a great investment. In fact, if you look across the public company landscape, that's pretty much where things stand. So what we want to do is invite a lot of those companies that can be a 15, a 20, a 25% internal rate of return. That's not good enough for your typical venture capitalist. If they invest $1 today, 5 years from now, they want to have $100. So that leaves a whole segment of companies that are very good companies, very profitable, doing well, that are left out of the game of private capital raising. They're uninteresting to the private capital markets today, but they would be interesting to the public company investor. And what we've seen, and this is probably one of the major business kind of hurdles that we are going to have to overcome. We're going to be drinking from a fire hose. There are so many companies that would come to this market. We have already experienced it. that are entrepreneurs, that are established, that sell things, that are making money, that really need, 10 or 15 or $20 million, and they could become a really major part of the landscape. That's a great public offering. And here's the interesting part of our research. This isn't, we're not guessing.
Mm.
Uh, the research on this, which we've really spent about the first 7 or 8 years researching this, is that at one time in America, before the year 2000, we used to have five, six, or 700 small capital IPOs.
Mm-hmm.
I say small capital, I mean at the IPO, the company raised $50 million or less in today's dollars. So five, six, 700 a year. We now have, if we have 10
Wow.
for the last 25 years per year, it's a
What
lot.
what what changed, Joseph? What changed in that to make a difference in that? What changed?
So, and that's a great question, and thank you. You're like serving them up. So a
I'm
lot of
interested
people,
in this, man. This excites me.
it's a fascinating thing because it's like it's America. Like everybody,
Yeah.
people, oh, I got rich on an IPO, and that just doesn't happen anymore. Where did it go? Well, really, what happened? A lot of people have blamed regulations. They
Mm.
blamed Sarbanes-Oxley. They
Mm-hmm.
blamed the Dodd-Frank Act. They blamed, the higher cost of reporting and being public, and that's true. It is a higher cost. There's no question about it. But why did they do it before? It was still quite high. Well, the cost of getting the capital was outweighed by getting the capital. And
Mm.
here's what's really interesting about the actual reason why. The actual reason why is our entire public market system, the structure of things changed in the year 2000. And it became a high volume share electronic environment. And we know that that's the cause because it's on the same time track as when the market for small caps collapsed.
Mm.
So if you look at cause and effect, you have all the regulations were enacted years later. So if that were the reason, you can't have effect then cause, right? So something had to happen first. And it really is because the world of stock exchanges, the world of investment banking and underwriting and making money on IPOs now only concentrates on billion-dollar
Right.
unicorn companies. And it isn't so much that it's $1 billion, it's that they have millions and millions of shares that trade in
Mm.
nanoseconds.
Mm. Wow.
That's where the incentives to take a company public come from today. So if there's no volume, why take the company public? So our journey was, okay, how can we really create some structural changes to restore the willingness of investment banks and stock exchanges to do this activity and still make a decent amount of money, but really put a market there, a new type of stock exchange marketplace that solves the problem? Because there's nothing wrong with the national market system or a
Mm-hmm.
billion-dollar IPO. That's fine. It's just not a one-size-fits-all marketplace any longer. So what we, out of our research, our research was published in Oxford University's Handbook on IPOs. It's chapter 9. And it really talks about what's called low visibility markets
Mm-hmm.
acting as stepping stones to national exchanges. Because if you're low visibility, what does that mean? It's not Apple,
Right.
it's not
That's right.
Tesla, it's not a household name stock. So we need to broaden the menu to the non-household name
Mm-hmm.
stocks,
Mm-hmm.
changing market structure, which is why we really invented a new type of stock exchange called a venture exchange. And it doesn't, I fought to try to not have that word venture be in the legislation.
Right.
So there's a piece of legislation called the Main Street Growth Act. And that
Main
legislation,
Street Growth Act. Okay, go ahead. Mhm.
yes, it's actually been bipartisan, introduced in the House. It's had a hearing. It's introduced in the Senate as well. And there's a substantial likelihood that this law will pass this year. It's in its final stages, probably after the election. But what it does is it creates this new type of stock exchange. It doesn't have anything to do with venture capital. It's
Mm-hmm.
just called the venture exchange. And as a stock exchange, when a company applies to be listed on a stock exchange, well, naturally, it has to go through a substantial amount of due diligence and
Mm-hmm.
documentation. So that's a more trustworthy company to invest in because they've
Yeah.
they've passed a test. Then they're in, through application, they get listed and they're available for the entire American investing public to invest their dollars. So when you think about the broad audience of, there's $37 trillion
Mm-hmm.
in the public markets today. Well, when you think about the size of that in relation to someone raising 30 or 40 or 50, it sounds like an enormous amount of money. It's not, because you have all of America that
Right.
can buy shares now. Okay. So the fact is that the new model, a new type of stock exchange that caters and has certain added protections for the small company and the small company investor, but is still a stock exchange. It's a
Right.
bona fide live stock exchange, but caters to this market, is the real solution to creating 500 or 1,000 companies per year going public.
Right. Right.
So that's really that's the lane we want to drive in.
I
Now
love it.
yeah,
Let me ask you a question, Joseph. When I list my $50 million company, $30 million company, into the Dream Exchange, when I listed there, again, stay high level with me here. How do other people know about it to invest it in? Do I have to staple flyers and fly across the United States?
right.
Or are you plugged in to other channels, gateways that everybody else may be in? And an investor who knows this world will see my company and he lives in Indiana, if you get what I'm trying to ask in some way. Can you help me understand that?
Exactly. That's exactly the point of the stock exchange. So
Okay.
our customers are the who's who of finance. So, once we open, a customer of stock exchange is called a member.
Got it.
Okay. So our members are JP Morgan, Morgan Stanley.
Okay. Okay.
All the largest investment banks will be a customer of our exchange. So if you are a retail customer,
Mm-hmm.
you have your stock brokerage account at E-Trade or at
Mm-hmm.
Ameriprise
Mm-hmm.
or at Robinhood, well, you're going to see these companies as a listing symbol. And if you want to invest in them right through the same app you're using
Got
today,
it. Got it.
we now open the world of public company finance to the smaller company. It'll be no
I
different
got
at
it.
all to
And
go
and
to
that's where I can go as the owner then of the company. I can go and do my regular PR that we'll use Elon as an example since he's a big name, household name that Tesla may do. I can do that too
PR.
in the invest in magazines, in the publicity. I can get on whatever Main Street Press or Run Down with Ramon and seed the market and say, hey, we're out here. We have a brand new technology, a new water bottle that does this. Invest in us. Anybody can find it. They know how to do it. Am I on the right? Is that this?
Exactly.
It's
That's
an equal
exactly
level.
right.
It's a level playing field, just a different exchange.
Yep. It opens an
Got
opportunity
it.
that currently doesn't exist. And, there are a lot of very good regulations
Sure.
about, private companies. So in other words, today, if you have the water bottle company that's just pristine,
Mm-hmm. Mm-hmm.
well, that's good. And maybe you want to raise money privately. Well, to go about doing that, you have to follow a labyrinth of rules to do it properly. And one of the things that's a prohibition is you can't just go generally advertise.
Mm.
Okay? You can't.
Right. 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 Right.
The SEC staff that I've worked in and around the SEC for decades, and they have a euphemism which is there in place to protect the grandmas, orphans, and widows. Okay,
Yeah. Yeah.
because they don't want a private company to sit down and come in and persuade someone who's really shouldn't be making that investment to invest in that company. And
Mm-hmm.
here's what we put in place. Well, if you're going to be listed on the Dream Exchange, Venture Exchange, you're going to have gone through a fairly sizable amount of scrutiny.
Yeah.
So it's available to those retail investors because it's a trustworthy company. They're doing what they say they do. They have to report that information every 3 months to the SEC. They have to report it to our exchange. And the luxury we have is people who break the law and violate the rules, they're called bad actors. Well, we are instantly, as the regulator, going to know, and we can put a stop to bad behavior because we're the regulator.
Mm-hmm.
And so, right, with that retail investor that really does want to see the menu, right now, he'll never hear about the water bottle company in Indiana. Never going to happen.
Yeah.
It's an incredibly high hurdle. And all of the good transactions that
Mm-hmm.
are like superstars, well, they tend to go to the big venture capital firms. And maybe the almost going to be a superstar. Well, the ultra high net worth and high net worth individuals are very often the ones being approached, and they just can't invest in every
Mm-hmm.
company. They're
Mm-hmm.
just,
Mm-hmm.
if you just take the wealth of those people, they're not concentrating
Yeah.
in these companies. There's some portion of it, I'm
Right.
sure they all invest in, but wealth managers, they break things down. They create strategies. Most of the big wealth of our nation gets invested in treasuries.
Yeah.
um, it's no risk. A very small portion of it ends up going to public markets, which is deemed higher risk, higher return. On the other hand, these are companies that probably don't bear any higher risk than any of the larger public companies. I mean, perhaps they will, but that'll be a whole. We're giving birth to an industry.
Yeah.
We're gonna
That's
find out,
exciting.
and it's so much fun to be a pioneer in this. There's an old expression: the pioneers get the arrows, and the settlers get the land. Um,
Hopefully you'll get a bit of both. Joseph,
so
curious.
I'm
Go, what were you
hoping
going to
to
say?
see I'm hoping to see this, the land and the prosperity. Really, I think that that's the defining moment
Yeah.
for my
Yeah.
partner, Dwayne Kyles, and I. Really, what we want to see is, we'll know what we're a success when we see hundreds of the companies that are flourishing that we helped.
Yeah.
That's the defining moment for us, because certainly climbing Mount Everest to open a stock exchange, we could have done all kinds of other things, if we were just motivated by how could we make some money ourselves.
Yeah.
I just we're truly, I mean, and I would just want to pay a compliment to my
Please.
business partner.
And what's your
He's
business partner's name again? Let's hear his name again.
Hiles. He's just an extraordinary man. And actually grew up in the civil rights movement. I mean,
Mm,
his father was on the stairway of the Lorraine Motel at the moment that Dr. King was assassinated,
mm,
because they were on their way to the Kyle's home that night for dinner.
mm,
So one of the things that our observation of the markets is, we're calling the underserved marketplace. So small caps in general are completely underserved.
mhm,
But when you start looking at the urban areas, you start looking at, even West Virginia and the Midwest Rust Belt and minority communities, there's not a lot of those small companies that have any hope of seeing public capital come to their
mm,
business. So, because of Dwayne, and we've kept true to the purpose. One of the things we're concentrating on is, trying to introduce ourselves to more minority companies
mm,
so they can form public capital. Right now, there are about 10, what would be defined as their origins as an MBE company, a minority
mm,
business
mhm.
enterprise. There are about 10 public companies that are like that. There are
Wow.
6,300 public companies. So it's a very tiny percentage.
Mhm.
And that percentage has really been smaller in the past.
Yeah.
So you can see that opening up this opportunity for public capital, especially to the small capital company, somebody who doesn't need
Yeah.
$1 billion. I mean, some of the small companies, they would choke on $1 billion. What would they do with it?
Mhm.
They need 50. They need 50 million. So our concentration is in underserved markets as well. And kind of keeping our integrity on the purpose
Mm,
is been, really. I don't even want to call it a challenge, because it goes without saying that that's the entire purpose of who we are.
mhm.
Like, you don't have to search far in our website to figure out what we're trying to accomplish. It's not a hidden purpose. And I think that restores the nice thing about using this exact tools. We're not inventing a new tool. Okay, the tools that are the world of public capital and stock exchanges and the stock market itself are workable tools. Many,
Yeah.
many, many fortunes have been made. So we're just applying those tools in a way that opens opportunity, because once the opportunity is there, we also know this very clearly. Public companies create jobs,
Hmm.
create opportunity on top of opportunity. So the employees, the staff, they all have really sustainable long-term career path occupations in all kinds of things, human resources and marketing and treasury and quality control. So you have career path jobs. But even more importantly, when you look at the landscape of the large public companies in our country, I mean, most cities brag about, well, we have 3 Fortune 500s, or we have,
Hmm.
5 Fortune 100 companies in our city. Why? Because those are good jobs, but more importantly, all of the prosperity around a public company creates an ecosystem.
Yeah. Yeah.
So it isn't just that the public company and their employees do well. People selling cars and houses and toaster ovens in the community do well, as equally well.
Yeah.
So it's a ripple effect. By If we can restore a lot of these companies and get capital into them and they do well, there should be a more perhaps prosperous broadening effect on the overall society of our entire country. And that's really who we work
Yeah.
for.
I
We're
love it.
working.
When you all go live, Joseph, tell me what's the biggest things that you need from those listening. More awareness for business owners, entrepreneurs to be in the exchange. More awareness for investors to be aware of whatever they need to know you, or other things. Help us. Can you distill that 3 or 4 things that you're like, Ramon, here's the 4 things, 5 things, whatever we need as you grow and go? Because some things only you can do. Like, that's your problem. But once you
Right.
get what you need done, what are the things you're like, here's what we need? Can you
Yeah.
capsulate that for us?
Yeah. So we're kind of in the early stage of
I understand.
our call to action, right? So the predictability of the exact date that will be
Sure.
a launched stock exchange is very difficult, because it's the process at the Securities
Sure.
Exchange.
But once that happens, let's say you get past all that's on your side of the house. Once that's done, what
Right.
would make you happy? What do you want?
Right. Sometime next year.
Okay.
So we've broken this into 4 phases. So
Okay.
phase one is open our exchange.
Okay.
We're nearly complete with that. Phase two is we are entertaining companies that do need large amounts of money,
Mm-hmm.
because that can instantaneously happen, and we can bring those companies to the public market in the underserved markets.
Got it.
So there are many companies that are not being approached, because maybe they're not in Silicon Valley.
I understand. Yeah. Yeah.
So we're opening that audience. There's going to be a call to action for those larger companies, some of whom we're, having our getting to know you and doing that. That's phase two. Phase three is really the venture exchange marketplace, the small caps. So one of the things we're waiting with bated breath on the legislation.
Mm-hmm.
Even if the legislation doesn't pass, the call to action next year and in the coming years will be, come to us. We want to help. It's the dream exchange. It's not the rain on your dream exchange. It's, how can we help you? We're setting up an entire group within our company that will help to educate.
Mm-hmm.
And it's really kind of phase four, which is this educational process. What are all the terms I need to know? What is the path I need to be on? What are the characteristics of my company that might indicate that if I'm doing the right things, I'll be successful in not only having an IPO, but in using the public market system to, become the next Apple, right?
Mm-hmm. Mm-hmm.
So there's an entire educational process. That's going to be a call to action in this coming year, where if you're an entrepreneur and you're selling the bottle, you're selling your plastic water bottle, and maybe even if it's moderately profitable, in some instances it may not be profitable at all. We want to engage those companies, one of the kind of factors that's always been in place is the idea more valuable than the cash flow?
Absolutely. Hence the aspect of profitability. I totally get it. It's not about some things we want profitable, but the bigger you get, it's to build it up and build it. And so a larger company then you can be an asset to them. Correct. So that's
Yeah,
yeah.
that's absolutely correct.
Yeah.
When you have that intellectual property, when you have the know-how, when you have the ability to make a marketplace, and I
Mhm.
don't mean stock marketplace, I mean a marketplace,
Mhm.
that makes your company extremely attractive.
Absolutely.
Tesla didn't make money, did not have profitability until about 18 months ago, but it was the largest auto manufacturer in the world because the idea was actually bigger than the cash flow.
Yeah.
They were able to design and manufacture on a large scale an electronic vehicle to be sold in the retail market.
Yeah, they're a brand too, the Tesla brand. People love the T-shirt, and they seeded the market for others. But Joseph, no, this is powerful. Any last comments, any last words? And one more time, can you repeat your full name of the
Yeah,
company, website? Do that one more time, and then I'll give you any last
sure.
closing comments you want to share.
Sure. So, my name is Joe Cecala. The name of the company is the Dream Exchange. Our website is www.dreamex, DREAMEX.com. And I guess my parting remarks are really I go a lot on podcasts and we're trying to get the word out. But the message that I really want to deliver, and I think Dwayne Kyles would echo this remark. um, you know, there's people who are hoping.
Mm,
They're sitting there. They are putting their payroll on credit cards.
mhm.
Okay,
Yeah, yeah.
even companies that are making a bit of money. And the key thing that we want to educate people in is when you have a good idea, never quit. You just
Mm,
can't quit. If the idea is good, if it's a viable thing to do, we need to get them investment dollars. And if we keep doing that as a nation, we'll keep having wireless
mm,
communications, climate controlled vehicles. We didn't have any of these things. Intermittent wipers on the car. So these are inventions from individual people,
mhm.
and the what we can't do as a nation is let those ideas, let those dreams dry up for a lack of investment capital. They have to get the money they need so that we can keep out creating all the challenges that might affect our ability to survive well.
Yeah.
So the purpose of the exchange is quite large. We want to live well as people. We want to be able to do, video chats
Mhm, mhm,
and have all the transportation and nutrition and lifestyle and kind of luxurious
mhm.
survival that we share today. We want to keep doing that. And
Yeah.
there's anything over literally centuries, if not thousands of years, that's a certainty. Humankind outcreates its problems to not surviving. That's why we're still
Mhm,
here.
mhm.
We've always created something new to enhance our ability as the human race to survive. And what we can contribute to that is when someone has those wonderful ideas, they should be able to reach a public market. And we should all be investing in those ingenious ideas because that's what's going to make tomorrow a better tomorrow. And I don't know that that's a message that's often heard, but like I said, my parting remark is don't quit on your dreams,
Mhm.
keep plowing ahead, and we'll work with you to make your tomorrow, our tomorrow, and all of our tomorrow a bit better just because we've interacted with one another.
I love it. I'm voting for Joseph. I'm voting for Joe. Thank you so much
Well,
for being here on the Rundown with Ramon. I wish you all the best with Dream Exchange. Everybody definitely go check it out. And again, co-founder, his partner, you give credit to your partner, Dwayne. Glad you're here today. And I hope to talk to you many, many more times to get the word out about new opportunities for me, new for me as
yeah,
well, new opportunities for investors, but more importantly, new opportunities for the dreamers who want to build much bigger companies. And I love how you said it and provide all the nice things that we have in the world and even things that help humankind. It takes capital and money to do it. Joseph, thank you so much.
thank you so much. Thank you for having me.